for inviting me, Sunil. It's a pleasure. Let me give you a brief about myself. My name is Manish Dhawan. I'm 37 years old. Been in this industry not for long, to be honest, just 4 odd years. And because of the bull run, have been blessed with pretty decent average, to be honest. We've averaged 34% CAGR, with last year being outstanding, nothing short of it. Well, it was a chance entry with how I got into this industry, something we'll talk about. And prior to that, I was basically working in the service industry. I'm a commerce graduate. I've been working for the last 10 years.
So thanks very much. That was great. Let's talk a little bit about your philosophy and how you view the investing world. And I believe you classify investors in 3 different ways.
Right. So this basically stems from, I think you must be referring to a presentation I'd given at IIF. Because of the audience, I had to, basically segregate it and to make it easy for them. And this is something I believe in. You basically divide investors into 3 basic categories, and that categorization is on the basis of time that they are willing to devote to a given to this profession. So the first category is typically a person, and I give example of my wife here, who's a doctor, and she's pretty happy with her world, and she goes to office, comes back, and she has no interest in stock markets per se. Now, even if I give her a book or 2 to read, I tell her that, see, this is Intelligent Investor written by Mr. Graham, who's guru of Warren Buffett. She would probably take it, she's like, yeah, put it on my table, but be assured that book would remain on the table, she would never read it. So that category of people they have their own core competence and they have no interest whatsoever in stock market industry. So that is one set. And I have a set of advice for such people. Then we have a second brand of people, investors, who are basically do-it-yourself kind of people, who again are in their different professions, all right, engineer, doctor, call what you may, but they have this inclination and liking for the subject, and they are willing to devote the man hours for, not full time, but they are willing to put in the hard work. Maybe they would be studying it in the weekends or something. So I have a separate set of advice for these people. Third set of people would be people like you and me, people who are doing it for a living. For us, this is our bread and butter. And so for the third set of people who are full-time investors, I have a totally different outlook and advice for them. So this is how I see it.
So can we get briefly into what those 3 different pieces of advice would be?
Sure.
If you can just sort of get a little more detail.
Sure. So the first set of people, the total people like my wife, for example, who are not interested in stock markets and they're not going to get interested. My advice to them is pretty simple. Treat this as a separate profession altogether and outsource it. Just like any good company does, concentrate on your core competence and find a person or advisor who's got skin in the game and simply outsource it to him. That way you would be concentrating on something that you're good at and moving the not so important pieces. Investment is important, but my point is, since you're not good at it, you find someone who's good at it and let him do it. Don't fool yourself into thinking that's easy and anybody can do it, because it's not the case. Because you don't have interest on the subject, you're not doing the due diligence properly, you're bound to get into trouble. So my simple advice is don't act smart, find someone who is, and give your money to that person. If you're not able to find that person, or if you're not able to trust that person, then invest in index funds. That is my advice.
Okay, thank you. So let's back up a bit. Tell me how I know you for a few years now, and I know that you're very passionate about this. Tell me how did the bug bite you? How did you get started? And when did you decide that this was the right career for you?
Sure. So, Sunil, I really hope and wanted to say something like Warren Buffett did. I was always meant to do this, or at the age of 13, I bought my first stock. There is no such thing in my case. This was almost a serendipity. My dad passed away in the year 2007, and I was basically given this job to dispose of his stocks. And nothing much, around 1 million rupees. And when I was basically squaring off these positions, or was thinking of squaring them off, I asked myself this question: on what premise and what basis am I squaring them off? I mean, why did he buy it? And that kind of got me interested, and I started reading on the subject. And pretty interesting, one thing led to another. I realized that I actually like what I'm reading. And I mean, here was a situation where all my life I despised books, and I'm like now gobbling up one book after another. And that in itself told me that maybe I'm cut out to do this. I've been a contrarian all my life, and while that contrarian streak has not been good for me in my personal life for sure, spending more time outside the class than inside, and eloping with my wife and pissing off her parents. But turns out this contrarian streak works pretty magically in this industry, at least.
The path less traveled is always the more interesting path, right?
Right.
So tell me a bit about your, you got started with stocks, you decided you wanted to sell it, and then you got into, looking, learning, etc. But you've actually ended up in a pretty specific area, right? So can you talk a bit about how it is you make money with your fund?
Interesting. So before I tell you the exact strategies that I deploy, I want to talk a bit about Charlie Munger. Charlie Munger. Charlie Munger was a partner of Warren Buffett, and I came to know about him through reading the annual letters of Warren Buffett. He introduced Charlie Munger, and that led me to follow Charlie Munger, and then read everything about Charlie Munger. One of the core things that he taught was about mental models, developing multidisciplinary mental models. And that thing kind of stuck with me. What he essentially says is that if you don't have a multidisciplinary mental model, you have what he also terms as a man with a hammer syndrome. You just have one way of looking at things, and that's your hammer. Any problem that comes your way, you try to bang that problem with the same hammer, which is a pretty stupid way of living life, according to Munger. Munger says you need to take in from various disciplines, psychology, physics, biology even, and develop a mental model which is apt to handle any situation. If you don't do that, you would be like again, he's a funny man. He says you'll be like a one-legged man in an ass-kicking contest, right? So this is something that I picked up early, and I realized that it's pretty stupid to have a strategy which is like just so confined in nature. I'm a value investor and I only look for assets selling for less than cash. Or I'm a trend follower and I just follow the trend. The idea in life is to have a multidisciplinary mental model. And then I also read Dan Ariely. I don't know if you know. I'm sure you're a well-read person. You must have. He's written a book called Predictably Irrational, where he talks about commitment bias. The problem with single hammer is that you start getting committed to that hammer so much that you start loving your hammer and start despising other people's talents. And I subconsciously made an effort not to fall in that trap and have a multidisciplinary approach. And so currently the strategy that I have is kind of an amalgamation of everything. I'm basically an opportunist. I'm looking for an opportunity. So I sniff where sudden, because of institutional imperative or panic, a relatively great asset is available cheap. Okay. Similarly, I'm not allergic to technicals. I